This is Bazaar Morning Call. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Friday morning, so I think you'll see bigger smiles than usual here, amongst the three of us at least. We're, of course, going to track markets for you and everything else which comes with it. We're coming to you from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Sonia and Nigel. Guys, hi, morning.
Hi, good morning, Prashant. Good morning, Nigel. And it's the start of a brand new month, a new series as well. So many triggers to watch out for. There's the US FOMC policy this month. There is so much election code of conduct, etc. So we have our hands full, it seems.
And we're not done for the week, guys.
Yeah.
We're
working tomorrow.
We have a session tomorrow.
Oh,
so
yeah. Oh, boy.
need to go easy in the evening. Turn up tomorrow morning.
Absolutely. Although 2 hours, right? 9 to 10 and then 11:30 to 12:30.
Yes.
So we'll be here tracking
It doesn't
markets
seem so
tomorrow.
bad, actually, given that it's only 2 hours.
It's all relative, right? Incrementally. Saturday is off, but then, you got to come in. So anyway, let's just quickly track the markets for you. And we'll start, as always, with where we left off yesterday. And we left off in a good place. The market, once again yesterday, respected the 20-day moving average and it bounced off it. And that's good news. It's defended. It's a critical, the 20-day I've always said is a critical kind of near-term differentiator between an uptrend and a downtrend. And the market yesterday on the Nifty managed to defend it. Now, overnight, the big data point, the big data point is the big surprise in GDP numbers, right? 8.4, 8 point something, right? 8.4. Amazing. Now, the question is, should you read that as indicative of a very hot economy? That's what the sort of typical response would be, but it's a more nuanced explanation because if you look at the GVA, that's more in line with expectations, and the difference, of course, is very strong indirect tax collections, but more coming on that one as well. But this is of course, I think something which we will continue to debate. Now, overnight, you had very strong session. S&P was up 0.5%, so it sits at a record high. The Nasdaq was up nearly 1% as well. That US CPE, which is the Fed's preferred gauge of tracking where inflation is at, it was firm. It was in line, about 0.42% month on month, which means annualized is about 2.5%. Now, Fed officials recently have said that they'd like, on a 6-monthly basis, for this number on an annualized level to be running at about 2%. We're at 2.5%. And most likely, this number will accelerate going forward. So is this a headache for the Fed? Looks like it perhaps could be. But at least on the day, I think what also took a lot of attention and interest yesterday was jobless claims which have risen. And I think they're back at about 200,000, almost 200,000, 195,000. And in a way, that kind of overshadowed the sort of hot inflation number as indicated by the PCE. And I think that's the reason why you did not see a very big jump in yields, etc. So the US 10-year left off at about 4.25%, just 1 basis point difference. And you also had the dollar index, which is now 104 plus. The dollar index, of course, reacted a bit more. Oil prices steady, no change, $83.5. Today, we get a sense of the global economy. The global PMI numbers for the month of February will help us do that. And through the course of the day, we'll get numbers from Asia, Europe, and, of course, later in the US as well. So, the setup in the sense where the Nifty has left us does not change very much to my mind. Support still at the 20-day, which has moved up a little bit to 21,959. We left off about 30 points away. And then, of course, there is the 40-day exponential moving average, which is 21,744. I think yesterday's session has shown very clearly that, the impulse is still to buy the dips. But there is hesitation and there is a little bit of worry at the margin that maybe we are in due for a pullback, a slightly consolidatory kind of phase. So the thing to do of course, no point going short. That's been a game no one wants to play. And I think that's been the right thing to do. But on the long side, to buy near these averages, near the 20, even better. If you get a pullback all the way to the 40-day, I think that will hold you in good stead. Bank Nifty saw a positive close yesterday. It should break, on the upside, it should break the highs of 46,754 and yesterday's low, which is 45,661. That should be defended. Again, for the Nifty Bank, you get a sort of dip closer to the lows yesterday. That opens up a good opportunity. And if that were to break, the daily lower Bollinger Band stand at about 44,900, 908 to be precise. The Gift Nifty will come up on your screen. Asia is up, US overnight was up, and GIFT Nifty is indicating about a 50-point higher start. Sonia.
Oh, absolutely. And there are a lot of positive cues to work with this morning, right? Top of mind actually is the GDP number that came through, the Q3 GDP at 8.4%. And there's a big upside revision to the Q1 GDP to 8.2% as well. So it just goes to show that the fundamentals of this market are improving quite a bit. And that generally is the basis of a bull market rally. So good GDP numbers, the Nifty reclaiming that 21,900 mark yesterday. And there was large buying from foreign investors yesterday as well. So FI has bought 3,568 crores in the cash markets. Now, the March series begins today. And if you look at the past 4 series, right, in March, it was just only in 1 year that in March 2022, when the Nifty rallied about 7.5% in that series. Rest of it was all in the red. So just giving you some data as we head into a brand new March series. But there are lots of triggers to watch out for. So there is, of course, starting today, the monthly auto sales numbers that come through. Strength will continue in the passenger vehicle sales and the two-wheeler sales numbers, but weakness could continue in the commercial vehicle as well as the tractor sales numbers. So just keep that in mind. Some of those stocks have already started to factor that in. A couple of other things to watch. There's the FTSE rebalancing. There's the election code of conduct. There are year-end adjustments that will be watched. And there's also the US FOMC meeting on the 20th of March. So all eyes will be on that. We have an action-packed, month of March. But for today particularly, looks like the going is very good. I'm also watching out for the hospital stocks because Jefferies put out a report where they said that the correction that we've seen in the last couple of days is unwarranted and the dips are an opportunity to buy. So it would be interesting to see whether the dips get bought indeed. Apollo Hospitals was the big loser yesterday. But what are you looking out for, Nigel?
Well, yesterday, what a good close we had actually to the series, and things look quite good. 2 big factors played out in yesterday's trading session, and the reason that we saw both the Nifty and the Nifty Bank doing well, one was the MSCI flows that we saw, and the second factor was the expiry-related factor. So that's what played out. Next up, in March, prone to volatility. Because in the middle of March, sometimes you see, treasury books, you see HNIs as well take some money off the table. And towards the end, you see some NAV propping as well. But in the middle of March, normally we see some bit of volatility, particularly from the broader markets. HDFC Bank, for the next few trading sessions, maybe we'll focus on that. There's a FTSE rebalance that is pending out there. That could be flows of around 450 to around 500 million odd that are pending. So this big boy can wake up because of this technical factor. It'll support the Nifty Bank as well. So that's an important one. Nuvama puts an estimate. They're expecting around a 3 to 4% move in the next couple of weeks in the coming days. So that's the important one because that's been the big underperformer. The rollover picture is pretty much in line on the Nifty in comparison to what we have seen. The open interest of the Nifty at the start of this series in comparison to last, well, you have the index itself that is a little bit higher, but in a number of shares as well, it's a little bit higher. The worry for me is the market-wide open interest. That's the highest we've ever seen. It's made a record high yet again. And the problem this time around is, it's in case you get any kind of shock, you're not really prepared for that. So the market is extremely heavy in terms of open interest. That's one factor, one word of caution actually that I would like to put out. What do the FIs do? Well, at the start of the series, when they've been net short, it's been very, very good times. This time around, they are almost in the middle, at around 65% of their positions on the short side. So let's see how that goes. And in absolute numbers, at the start of the last series, it was around 108 lakh contracts on the short side. This time around, it's nearly half of what we saw, at that point of time. So around 59,000 short contracts. So they're net short, but not to the extent that we've seen in the past. Levels we're looking at on the Nifty, the 20 DMA becomes crucial on the downside. Around 21,900, I would say, is the important level. On the upside, the recent high that we saw. So we have a broad range between 21,900 to around 22,300. The Nifty Bank, we ended pat in line at the 20 DMA in yesterday's trading session. Can we move to the 50 DMA and then move to that 47,500, which last time around we couldn't get to? That's the important one. The stock that I'm tracking from the metal index is, the Jindal Stainless. That's been a big outperformer, in this year so far. The promoter entity has bought more than 500 crore shares, even after the stock has done quite well. Valuation-wise, it's not very, very cheap. But I've been seeing that this one has been seeing delivery-based buying on a day-to-day basis. So keep an eye out on that one. It gave a bit of a dip even in yesterday's trading session. Let's see whether or not there is support at low levels, because valuation-wise for a metal company, it's not very cheap. Back to you guys.
Okay, thanks a lot for that. And of course, as we said, one of the big triggers is India's GDP has been revised up again. So the macro triggers are positive. That's something that we'll focus on through the course of the day as well. Let's get you some money market views on the rupee. Lakshman and V of Federal Bank says the dollar index and US yields consolidate as US inflation and jobless data come in on expected lines. The rupee remained flat during the week with little volatility as FI inflows get absorbed by the dollar demand from banks and importers. He expects the rupee to trade in a range of 82.82 to 83.10 range in the coming sessions.
All right, we have Lakshman and we on bonds saying that government bond yields were little changed and traded in a thin band in absence of significant cues. US quarterly GDP numbers were as expected and failed to provide any major triggers. India GDP growth for October to December quarter at 8.4% was far higher than expected and may push back rate cut expectations. In the coming session, he expects the 10-year benchmark bond to trade yield to trade between 7.05 and 7.15%.
Well, we've got a lot of stock-specific action track for you. We'll get to that in just a bit in our special Top 10 segment. For the time being, we run you through the list. We're looking at CG Power, Tube Investments, Suven Pharma, CMS Infosystems, L&T, ICICI Lombard, Tips Industries and Chalet Hotels. All of them will be reacting to positive news flow, while two pharma stocks, Biocon and Auto Pharma, will be reacting to negative news flow.